Very good morning, all of you, and welcome to another session of live. Um, this live session with me on market preparation. It is about 7:30 in the morning, and we have just behind us the market movement which happened on the budget day. Now, one thing which I've learned is that the two kinds of days, you have events, and these events can be very big, have big impact on price movement. Market is sentimental. That is the nature of market. It is emotional in the short term. It is an emotional thing. And keeping out from the sentiments of the news, and if you can focus on the technicals, it can be literally the most lucrative things to do. On the other hand, you have got implied volatility, general level of volatility, which is very high, which might cause execution errors. So in order to make sure you don't fall into that trap, keeping quantities low is one of the solution. Keeping the risk variability low is one of the solutions. Now, how many of you participated in any kind of a short trade on the day of the budget? Can I have a raise of hands? I'm also raising my hand. Participated in any kind of short trade. Okay, so quite a few of you did. Okay, sounds good. Sounds good. We have been preparing every day, and one of the most common things which has happened incidentally, so I didn't really thought of it at that time, didn't really think of it at that time. We started our morning preparations somewhere around this day, and we have been in a constant downtrend ever since, except for a few days of pullbacks in between. Literally a clear downtrend. If we go back to the hourly chart, which you have been studying, and we have been seeing that, okay, the downtrend tends to continue. The weekly chart definitely was showing us a bearish Q, but again, it was not a very full bearish engulfing. So I'll give that to the market. But daily charts and hourly charts continuously going down, sticking to the trend. The last time we discussed, we were looking at these areas of development on price, these areas. Overall trend being down. The most important point was that along with this, Bank Nifty was has completed a distribution pattern and had been trading around below the support zones. So a classical case, one of the case scenarios where distribution pattern is happening, right after that there is some sideways movement, right after that there is a final much bigger breakout from that movement. Look at the size of the distribution pattern, look at the size of the consolidation, and there was a strong continuation of this downtrend. So, points to be noted. Now, sir, what do I do? Now that we see this happen, now how do I perceive the market? Well, the simple thing is that the participation on Saturday. Why was the market open this Saturday? Many people are complaining. Why is the market open this Saturday? Well, if the market is open on Saturday, it's actually a good thing because during the budget there will be these scenarios where there will be sentimental impact on the market, and if that was supposed to be something big, that risk would have been people would have happened to carry that risk overnight, and if they get a chance to square out the position or take some position or participate with new trends, there's nothing wrong with it. Obviously, after such a strong, the general Okay, look at this. See, market we have to see from two angles. One is the mass psychology angle, and the other is the contrarian angle to be able to read the market and get a feel. So, from a mass psychology point of view, the trend is pretty clearly down in the short term. But looking at it from a contrarian angle, from a contrarian point of view, what do we notice? If you are a trader who doesn't know anything about technical analysis, most people do like that, trade emotionally. What is the easier trade for you? The easier trade for you, the easier trade for you is actually the easier trade for you is actually to buy, okay, not to sell. So one of the things which I do expect a lot of retail participants to do, looking at contrarian, I don't want to call anybody a fool, but the thing is that we do have certain contrarian ways of looking at technical analysis, which help us in understanding what mass behavior would be like and what the retail behavior of the weaker hands would be like. And one of the indicators of showing us contrarian behavior is option open interest data. Now let me take you back to the last budget, which was around here, right after the election results, around this point. This is for Bank Nifty, and for Nifty, that day itself there was a big movement, right? So what exactly happened over here? The next day, the market fell, and I don't have that hourly data with me right now. Market fell, and right after the first 15 minutes, odd, you had a strong consolidation. I could literally see that continuation pattern being developed on the chart, and on the options open interest. There were more people who were, ready to buy calls, more standing open interest on change in calls, uh, and less change in puts. It's kind of similar to what we have seen that day. So after this big red candle, which is a bearish belt hold line, that really means nothing except for the fact that it's a very bearish candle. We can easily see continuation, and we can correlate our observation by seeing that, okay, because these are the few best days where you actually see where one-sided mentality is. You see how low this is compared to this. It shows you that the people who have bought calls are holding on to their position. People who have bought puts, many of them have probably exited, and not as many people have bought puts. Underlying assumption is that the weaker hands generally tend to be buyers of options. Okay. Second thing is there's a lot of implied volatility, which has to be cut down. Now, it is not necessary that the market will always cut down implied volatility. So there are two cases I'll give you. So let's look at one, Nifty. I'll take you the same date on Nifty. And what we are doing over here, we are studying a scenario which happens out of another scenario. As simple as that. This was the previous day when we saw that fall, which did not happen in such a pronounced way in Bank Nifty, but it continued to go down. It continued to go down the next day, and then it halted. Whereas this happened in case of Bank Nifty, that it did not move that day much. The next day it went down, and after that it halted right underneath a support area. What are the difference between this move? Of course, this is a wedge pattern of sorts, where you see there's a lot of weakness in the up move. There was overclouding of resistance over here. We see a very clear divergences from the previous highs comparatively. What I mean to say is that a lot of cues which are bearish in nature, we still have those, but The difference between this move and this move is that this is a much bigger distribution pattern. I'm just speaking logic, simple logic. Look at this. This is a huge distribution pattern. Come on. And you look at this. This is not such a big one. In fact, this is within the range. It's when the range breaks is much later after a few days. So given that logic, I do expect that the market will possibly act with the pattern and continue its journey towards the downside. This is just an educated view, sharing it for education. It turns out to be right, turns out to be wrong. As a trader, how I perform will matter on my spontaneity on day like this. Now we don't, since it was Saturday, a lot of data, we're not having SGX data, I'm not having properly on the charts, SGX charts, which I see on investing.com generally. I'm not having that Saturday data. Some gaps are there, but if I look at the zone in which SGX came and halted, just compare it with the SGX. Whenever we see, it's actually the futures chart, right? So the futures on the February futures, the last price 632 around. 632 around is the last traded price, and here somewhere around that SGX also should be. So we're going to try and see what SGX looks like right now. Okay, so there has been some pullback in terms of SGX, and we can see this zone. Okay, let's look at how the fall happened actually on Nifty. Today is going to be a very interesting session. I know it's a no-brainer that there's a strong downtrend everywhere. I won't go against the trend. So might as well focus also on how profound this downtrend can be. Okay, these blue lines are actually those interaction zones and points which I marked out on the hourly chart. And some interaction zones and points, okay, have been important in the recent past, out of which this one 830, okay, 830 is where the market was showing some interesting things. This is the 15-minute chart. 830 was something, it was in my mind also. And if you look at the daily chart over here on Nifty, this 830 zone is something which is proved to be important again and again and again. Okay, 830. This zone, it's always a zone, right? And the market gave a strong pullback and a strong last leg of the fall. Till now, whatever fall we've seen, this is the last leg of the fall on the hourly 15-minute chart, right? So over here, what I would like is actually to see further fall, obviously. Now we are coming out of, in case of Bank Nifty, a strong distribution pattern. Also in case of Nifty, there have been a major support breaking of a lot of supports. Okay, what gives me some cushion over here is this range. Now this totally depends on the market whether it wants to halt a little bit in between or it wants to, going forward, keep going down. Totally depends on how the market unfolds. The general speculation is that, okay, the implied volatilities were very high. A lot of people must have been buying call and put. So possibly what's going to happen is that we are going to see that the market has moved sideways for a while, just to shave off all the implied volatility and have a cut in the option prices. This is the general way people are looking at it. Okay. Again, I'm saying nothing right, nothing wrong. These are just sentimental cues. Looking at the put call ratio, as in the open interest also, any contrarian indicator will give me a certain important clue which will help me to define, okay, whether my intraday trade I should take or not. On the days like this really becomes important. That is the contrarian angle. What is the logical mass psychology angle? Yes, we have some. If I go across stocks, in most stocks I've seen a big red candle, uh, big movement. We were been talking about HDFC Bank, all of them that were hovering around, post distribution areas. We have been seeing falls happening over banks, over a lot of stocks, right? Except for the IT sector, perhaps. Except for the IT sector. Now, what happened during the budget? Some general knowledge for you. No, I'm not a fundamental analyst, and I do not say that you should trade on the basis of fundamental analysis. But there is definitely the fundamental analysis input and knowledge which you should have to some extent to know what is going on in the world. So what has happened is that if there has been a slash on the distribution tax for dividends, sectors like IT, which give out a lot of dividends, they end up saving a lot of this money which they were paying for double taxation. That is something which has been a positive for a certain sector. Expecting or not expecting corporate major changes, whatever the market's expectations were, okay, whatever the little hopes were, these are very subjective things to talk about. When market was not expecting, therefore market was expecting something decent to come out of budget, but it did not come out, so it went down. Market had expectations from this, that always whatever the move has been before that, whatever it is, the opposite of it is the expectation. And most moves are caught catching people by surprise because they're not caught up by the direction, they're caught up by the volatility. And that sort of increases the volatility further. When it comes to the public opinion, most people who are looking at budget, generally, I mean not everybody, but 70% of them roughly would think the budget is good if I have got my taxes lesser than what I have to pay. If I had to pay X% tax earlier, now if I have to pay less than X%, that means budget is good. If I had, these are the general way people think. The public sentiment works like this. Public sentiment becomes emotional in the short term. This government of ours does not really win the perception battle many times for many reasons that these days things mashed up on social media very easily. Uh, the economic awareness of the public is less in this country. Many times things which are done for the long term are not really given credit to if it does not really serve the short term. Um, it's a very narrow perception, and be it any government, my experience I have seen that a slide here and a slide there changes a lot of public opinion about how the financial system is working. Our economy is an ecosystem, and in this ecosystem, literally just like any self-fulfilling ecosystem, even if it is not self-fulfilling, what generally happens is that, like for example, air is moving, water is moving, okay, there is evaporation, there is monsoon, there is rain, and one animal is eating another animal. That's how ecosystem is working. There's a food chain, etc. Similarly, our economy is also like that, which there is, if there is any kind of equilibrium in the economy, that is sustaining the economy, that is always there. But once there is some injection of a new thing which comes in, it retains its, there's a small knee-jerk reaction, then it retains itself. The economy retains itself. That is how economies work. Now, how good economy behaves would be a vibrating economy. Now, one of the things which people are very concerned about is how individual tax systems have become a little more complex. Would you like two bits from my side on it? Please raise your hands if you want me to talk about it. Uh, how it would impact. Okay, okay, fine. So I'll go ahead with it. So the thing is that what the intention of this speech was, of this change was, that suppose there is a person A, he earns 100 rupees. I'm simplifying the numbers and the percentages for easiness sake. He earns 100 rupees. For the first 20 rupees, he's entitled to certain rebates and setting off this income from those for the first 20 rupees. Okay. And these first 20 rupees, I'm talking about after 100 is after he has become taxable, not before. Okay. So we'll keep it simple. These 20 rupees he gets he or she has invested or has expended has made expenditure towards certain things. Okay. For example, the person has invested in insurance scheme or certain bonds, which are is exempt on taxes, right? So what this person does is he spends this money over here, he invests this money over here, this locks his money up. Suppose somebody went and said, "ठीक है, मैं LIC में I'll make a policy and multiple policies I'll make. I'll spend all my 20 rupees and that will help me pay lesser taxes because this will be set off. This 20 rupees will be set off. So this money goes to the LIC. Just an example I'm taking, or any other insurance. This company further invests into either the stock market, which is the secondary capital market, the primary capital market through IPOs or through some other sort of investment. It invests this money and it invest. So one person is basically investing his funds indirectly through this medium, and he's getting fixed returns on it or safer returns on it. Mostly these are safer instruments. Also gets a tax exemption, so that's a direct benefit. And for the rest 80 rupees, he's taxed. Now let's take a person B. Now the tax reform gives this person the chance that either you do what A did, or if you make 100 rupees, don't shell out 20 rupees. Don't shell out 20 rupees. Keep this 100 and you will be taxed slightly lesser. So on 80 rupees, let's on 100 rupees income, A first is left with 80 rupees cash, out of which he ends up paying some taxes. Okay. Or in case of B, this is 100 rupees. He takes the option of not taking those exemptions. And he says that, okay, fine, I am going to pay lesser taxes, but I'm going to have my base as 100 rupees. So the percentage is lesser, the number is bigger, right? What is the advantage B is having? That first of all, he is retaining that 20 rupees initially. He is retaining liquidity. He is not investing through some other schemes. Either he is making his decision to invest. B says, okay, I want to start up a new business. Right now, I'm doing a job. If I save some amount of money for 3 years and then take a loan, adding all of that, I will be able to start a new business. I have the capital power. I have more liquidity. If I don't want to start a business, I can spend more money. I can go for a holiday. I will do the insurance thing later when I'm older. So when this scenario is happening, a new guy, a new person who is maybe in his 20s or started earning whatever it is, they started coming to somebody who's not doing very well now. Suddenly does very well and starts to pay taxes. This he has got the option to go for this. Now there are a lot of people who have already opted what he had opted for. Because for many years, those exemptions were available. For example, including myself, I have opted what he had opted for. Okay, many people have done that. Most of you have done that. Possibly, the masses are now, when they are more, they need to be more aware economically. So if the government comes and says, "Ki bhaiya, now this is the new scheme," so people like me will say that a lot of reasons why I took out that 20 rupees was to save some taxes. Why I shelled out that 20 rupees was to get some exemption. And now the government is changing the rule. So the government says you go for this or you go for this is up to you. Now this is not meant for people who are doing businesses. I'm sorry if my information is a little here and there. It should not be, but I've done some research. Maybe, but I've spoken to some CAs also. This is, I think, not there for small scale businesses because HRA is not paid, etc., etc. So small scale businesses are already vibrating in the economy with direct investment. So I'll tell you how this ecosystem is, that if there is a lion, okay, suppose there's a mouse, because this does not look like a lion, and there is a lion, right? Our economy vibrates more when the smaller elements have got more vibration of more flow of money compared to just having one big element and the others underneath it. If there's just one corporate and everybody is doing a job for that, everybody is buying products of that company and doing the job for the same company, and there's nothing else, then it will be a complete monopoly. There will not be competition. There will not be something close to the perfect competition. The economy will become more vibrational when, for every little thing, there is no KFC, but people are opening their own brand of burgers. Suppose we have got Mr. Vijay Joshi over here, he says Vijay Joshi Burgers. Okay, for example. Okay, so you have got small scale businesses which are not corporates and they're growing towards bigger, becoming bigger corporates. That means the economy vibration becomes high. So this propels pushes the economy to inject more liquidity in the hands of people so they can decide if they want to take more risk and not compromise. Earlier, if I had to not, if I say suppose this is 1.5 lakh rupee exemption, suppose I have 1 lakh rupees going on, okay, and I say 1 lakh rupees every year I give to this and this policy, I get a direct tax exemption. Somebody has chosen 50,000, somebody has chosen 1 lakh, somebody more, somebody 80,000 within the limits of the exemption. I pay 1 lakh rupees to avoid paying taxes on this 1 lakh rupees by having this set off from my personal. Now what happens is I can use this 1 lakh rupees and I can put it in my own business, get a chance of generating more returns. So it encourages that. This is one thing which people are most concerned about. And these days social media, a lot of jokes, a lot of stories, anything is being spread. So I'm just trying to tell you that there needs to be a assessment of how we are looking forward to it. Okay, and these are long-term things. Over a period of time, the habit of doing this, changing this, will impact our capital formation base and our direct small scale business growth and people who directly want to choose where they want to invest their money or consume their money in regular expenses. Okay. They have that option. Automatically that could lead to a higher spend. Okay, I'm not saying there's not a debate between spending and saving, but I'm saying this could lead to higher spend. When people buy more things, expend more expenditure is there. Then what happens is it is pretty logical that you know uh, there is more products being sold. Therefore, they push the GDP high. That is how generally happens. It's okay, very fancy to say the GDP goes higher, but if half the people are in debt, then there's no point of having higher GDP. Getting the point? So we have to look at both sides of the coin. You can have a lot of GDP growth, give everybody loans, let them go and buy everything, automatically GDP will increase. Getting the point? We have to also see how the structure of average individual credit score is, how much they are paying out by sacrificing what expenditure, etc. Right? So these are the things. We in India, and I think most of the world also, वो बोलते हैं ना घर की मुर्गी दाल बराबर. I'm not for or against any government from a political point of view. I'm just saying whichever be the government, there are some really intelligent people who are in the finance ministry because of which they are in the finance ministry. And if there is a person X who is the CEO of a company Y, which is a foreign company and is an Indian, works for a foreign company, earns in foreign currency, we appreciate and trust those people more than people who are in our country working for our own country and using the intelligence for the work of the own country. This is a very big gap. Not to sound too patriotic, but the point is that this is public sentiment. Oh my God, there is no big change. So this market gets an emotional reaction. And then market says, oh, okay, this was not so bad also. But this might take 2-3 months to happen, bigger correction to happen, and things like that. But this is what the macro news you will see evolve. That the people absorb something new in a different manner. And here, one of the things is that there's nothing much which was very new or very important or very towards the for of people, towards the opinion of people that what it should be like. Okay, and then obviously not talking too much in details, but the expenditure on other aspects of economy were also presented in the budget. So I'm just telling you from the corporate and the individual point of view, some changes which happened. Now the corporate is giving a dividend to somebody. If I make 100 rupees and I'm a corporate, I actually give out say 5 rupees dividend. Or say let's say I give out 10 rupees dividend. Okay, I end up spending that double taxation because I have to give a taxation on that dividend distribution. So, because I've already spent the taxation on income, then it is not something which is good. Also, according to the sort of you know the coronavirus etc. has been one of the things which is not very happening for the world. This has a bearishness impact on the Chinese and the Chinese and the Asian markets overall. These kind of things are dangerous, an epidemic which can go across anywhere in the world, and it is obviously dangerous, right? So that bearish sentiment from a macro economy point of view, I told this earlier also. If there's this sort of a the virus which can spread, countries are shutting down. Almost China, some cities are literally shut down. Lack of productivity, impact on GDP directly, impact on economic growth directly, no tourism, no government spent on healthcare. A lot of these factors are not very healthy for the economy. So we have to keep these subtleties in mind just to know what's going on in the world. And now coming back to technical analysis. So one example of a stock which I see is near a fresh breakout, has taken a fresh breakout of a certain range is Axis Bank. Now I say it has taken out from a certain range because we have such high volatility, one can still expect pullbacks into the range to some extent. How would I look at it, sir? I would look at it personally. I feel there should be some immediate continuation. Immediate continuation. If that happens, I will trade with the trend in intraday. A lot again depends on today's market's overall sentiment. I've always said keep a stance in keeping in mind what the tone of the day is. So the tone of the day becomes very important for us. We have practically a lot of stocks which have shown that okay, I'm going below the previous few days support, etc. Like one of the stocks, Z Limited. Now, recently we saw a climaxing move. This is a pullback. This proves to be a pullback. And if this is a pullback in a downtrend and new lows have come, price is literally sliding down and breaking these weekly lows. So this is one thing which I just don't want to look at for one day, but for probably 1 week. Okay, it's a high beta stock, volatile stock. So if any change happens in the market, then we have to keep an eye on it. And UPL is something which we've been speaking about lately. So look at this, the consolidation which happens near a much bigger breakout area, much bigger breakout area. Here I was talking about the candlestick analysis. Now I'm talking about pattern analysis. And we were bearish from these areas, and now we see the further down moves have happened. Okay, in case of UPL, this is expected to continue being in the short-term downtrend. We are close to a support zone, lower end of this range, and this point. So what one can do is in case of intraday, keep an eye out for the 497, 498 zone and see how it unfolds. And from the weekly point of view, daily point of view, there is a clear bearish going on, right? There were certain stocks we spoke about. I'd like to speak about them again. One of them was, oops, what happened? One of them is ITC. Now, ITC, so mentioning a few days back, sometimes ITC can impact it during the budget. We were looking at the distribution which was going on over here, and this support zone broke. One thing I've always said is, according to Elliott wave theory, the ideal stop loss will always be the previous high. And this subwave correction which happened, now there was more dumping on the stock later. So it is with the dominating trend. This is something which is totally worth keeping in mind. I have seen ITC give out such interesting patterns sometimes. And see, look at this. I remember this one. This volatility over here with this red candle, strong downward movement with highly volatile movement, and look at the consolidation, the continuation. Okay, so it stopped near the support zone. Now what happens is here you have already stopped and started to move. So there is, in if any support zone, these are very long term, very old ones which are there. The price seems to be slashing through all of them. More chances of immediate follow throughs, but because it is very news driven, you got to be just waiting and letting the market show you how this is behaving. SBI was one stock which we've been speaking about. Here again, strong bearish sentiment. Okay, a lot of PSU banks have given fresh breakouts, fresh candles which are strong red candles, right? Strong red candles. Now, all of these could really mean that we do continue and there is a strong breadth of the market on the downside. Undoubtedly, that is happening. A strong bet is existing. ONGC was one thing we spoke about also. We met we met on this day morning, right? Or the 31st morning last we met. Day before yesterday we didn't have a class. A session like this. So we've got ONGC, we've got IOC, So we know which sectors are there, we need to look for which direction. And apart from the IT sector, TCS we had been speaking about, and if this downtrend, against the overall trend, we saw distribution which worked out. We saw substantial move after this. But if this is a uptrend which is maintaining overall, it's going to maintain overall. If this uptrend is supposed to maintain, then any distribution is just basically causing a correction to happen and not a full reversal to happen. Okay. But for that, we need to really break the weekly highs. We need to really know where this is going. Again, a bit of it, the impact news driven, but worth keeping an eye out. Worth keeping an eye out for a few days, see how this unfolds. Okay, maybe 1 or 2 days we start seeing some interesting things. Maybe it will take 5, 6 days, 10 days. Okay. So, important point. The auto sector and the auto ancillary sector, okay, the two-wheeler spaces, the four-wheeler spaces, all of these are cyclical in nature. And when market is in such a strong bearish mode, that cyclicality, demands that we should have the sector also in a bearish mode. Eventually, things tend to catch up. Lupin is one stock which we've been speaking about. With the structure of the movement, we've been speaking about since this point, since this first fall. This created a ABC. We've seen further downside. This is one short-term downtrend. Some farmer stocks are not very bearish, some are. Okay, we don't want to preempt anything. One interesting stock again, many of these cues for today are not really that you have to get a trade out of it today, you have to squeeze out some idea out of it today. Some of them are just big changes which are improving our understanding and refreshing our perspective towards the market. Okay, remember LNT. So this is one big lesson and one big cue that you don't need to always have an opinion or a perception towards every stock. So one thing I was very careful about seeing the weekly lower lows on LNT and the daily chart movement also, the strong cut which happened, creating lower low. Such a big movement on the weekly chart also. And this pullback which is happening, okay, first it was over here. I was not very bullish this time. Then it broke this level, etc. All this could be a complicated correction of an overall downtrend. Getting the point? So be careful by of going against the dominant trend. This is always going to help to those who are looking to trade conservatively and consistently. There's nothing wrong with it. So if somebody is having a position and speaking technically, purely I'm speaking technically, a lot of things are not matching up. I remember speaking about I want to wait for some consolidation, etc., etc. Overall, this has been maintained as a this thing. So LNT for the next few weeks, not just today, we are heading possibly towards these, and we possibly would break these lows. So LNT must be on everybody's radar. I feel this stock is totally worth keeping on radar. A high volume red candle we see. Okay, does anybody have or remember the FIIDI numbers on Saturday? Because not really sure I saw them properly. I don't see FIIDI on daily basis. 1 minute. Not getting the 1 minute, please. One second. We'll get that maybe later get back to it. But a lot of a lot of FIIs, whatever their analysis and impact is, if they see that you know that it is worth exiting from the market to some extent, or there's some confidence in the downside, because yes, a lot of mid caps had just started to move, now not moving again, going down. A lot of small caps, even though recently market did very well, not the broader segments are performing that strong. So if FIIs come on Monday morning and they say, we were not there, we were on holiday on Saturday. Now on Monday, let us go and do some selling. They would be impacting things with the selling pressure. Another important point to be noted. What are the chances that we might actually see a gap down? There's actually a chance we might see a direct gap down also. The data over here on the options is telling me this. There could be a chance of a gap down too. So I'm looking at stocks like Axis, like Lupin, Aisha Motors, Bosch was something which was on my radar. Looking at Bosch, and this is one, it was actually a very good trade to take. I did participate in a part of this move also as an intraday trader. We have broken support, the longer term trend is down, and something is with the longer term trend. I want to be with the long term. It would be a better candidate to go short. So there is more movement happening in some, sectors like that. Small interesting cues you have to take, and when the market opens and behaves in a certain way, that will teach you, okay, this is the undertone. Now suppose there's an immediate selling which starts happening, or there's a small pullback, small gap up open, and now since volatility is very high, just look at this. Small gap up open could mean 50, 60 points, right? Could mean 50, 60 points. This small gap up open also, there's a chance it will be sold into at least the first 10, 5 minutes, 15 minutes. There should be that sort of thing happening. Now, in the middle of the day, if the selling has not happened at the open, goes up, hovers around a little bit. So let me just draw it for you. So this is the close. If there is a gap down, chalo, then the bearish undertone, it is with it, no problem. 1 second. If there is a gap up, this is the previous close. This is a gap up. This is a big red candle. It is highly likely it will get sold into. This is the open, it will get sold into. This is the previous close. If there's a gap up, suppose it doesn't get sold into, and it remains like this, goes like this, higher also. You have to wait for the middle of the day. And number three scenario, if there is a strong gap down for some reason, and then the market gives sharp pullbacks, that means 2 or 3 ups and downs during the day. All these things are strong possibilities given the level of volatility and possibility of those volatility. Keep these things in mind. What happens, sir, if the market is completely reversing from here? Less chances, but these are markets, they can do anything. And truly, like Mark Douglas says in the book Trading in the Zone, professional traders literally believe that market can do anything. We don't trade, we are looking at possibilities over here, looking at probabilities over here. So let's keep looking at it from a probabilistic point of view, not be in a hurry. One has to be, suppose you are not trading actively during the budget day because it would be volatile. One has to be as careful at that time also, at this time also, even though the budget has already come out, already things have happened. One has to be careful now also. Okay. Broader sentiment, broader trend, broader breadth of the market is down. No point over analyzing it as an intraday trader. Be open to some scenarios, keep our bias towards the direction as a preparation bias. And if the market, it's very simple. When you prepare, either the market is behaving according to you or not according. If you prepare well, many times the markets will behave according to you. If you prepare well and market does not behave according to you in the morning itself, don't need to do anything. Wait till it starts showing you and matching up with your cues or showing you new cues. Okay. So keep those things in mind. And I will see you tomorrow. We'll have further discussion on much more things, more price data to look at. It was a very interesting Saturday, no doubt. We'll take it forward from here tomorrow early morning. So until then, thank you very, very much. Have a great time, and I see you on the other side tomorrow. Okay, thank you, Vijayji, thank you, Edgar, thank you, Prashant ji, thank you all. Bye bye. Have a great day, all of you. Take care. Enjoy. Thank you, Narsingha ji.